$500,000. That's the number most people think they need to buy a business. They read it online, they hear it from brokers, and they walk away before they even start. The real number's a fraction of that. I'm going to show you the math on 3 real deals, so you can see exactly what it takes. Here's what happens. You see a business listed for $1 million. Your brain says, I need $1 million. Or you hear someone say you need 20 to 30% down. And you think, yeah, that's $200,000 to $300,000 just to start. So you close the browser tab. You go back to your corporate job. You tell yourself you'll do it someday when you have the money. That math is wrong. The people telling you that have never closed an SBA deal, we've closed hundreds of millions in deals. Many of those being SBA-financed acquisitions. We look at over 150 deals a week. Every week. I'm not telling you theory. I'm telling you what I see. SBA 7A financing exists to make small business ownership accessible. The SBA will finance up to 90% of a deal if you structure it right. Layer in a seller note, and the buyer's cash at closing drops to just 5% of the purchase price. 5%, not 50%, not 30%. 5. Let me break this down. Every SBA deal has 3 parts. Number 1, equity injection. The SBA requires a minimum 10% equity injection on acquisition deals. Now let me clarify, that's not all your cash. That's total equity, which can come from you, or it can come in part, but only in part, from the seller as a seller note. Number 2, the seller note. This is where the structure changes everything. We close almost every one of our deals with a 10-year full standby seller note at 0% interest. Full standby means the seller gets 0 payments for 10 years until the SBA loan is paid. It's not a pipe dream to get those terms agreed to. We negotiate almost every deal with those terms. If the seller carries a note for over 5% or so of the total deal, on those terms, your cash at closing can drop to just 5%. The more the better. We often aim to have at least 10 to 25% seller finance in every deal. Number 3, closing costs. These sit on top of your equity injection. Legal fees, diligence costs, lender fees, the SBA guarantee fee, appraisals, environmental reports, and whatever else is applicable. The SBA guarantee fee has a calculated formula, but expect all these fees to end up somewhere between 3 to 5% of your deal. Now here's the part nobody talks about. Your cash at the closing table is not the total capital you need. 5% gets you to the closing table, but you need 15 to 20% of the deal in total liquid capital. The gap between 5% and 20% is post-close liquidity, runway as the lender looks at it. While you learn the business and operate, that post-close capital doesn't all have to be cash in your savings account. It can be a HELOC, retirement account, stocks that can be made liquid, cash surrender value on a life insurance policy, and a few other means. But a HELOC is the only acceptable debt instrument that can count as liquidity. I know some people love toting that 0% credit cards can do it. It's not reality. Those actually make it worse. Remember that 20% number. It's going to come back. Let me put real numbers on this so you can see it. $1 million deal is the entry point for most first-time SBA buyers. Here's the full math. Purchase price, $1 million. Now, closing costs. Legal and due diligence run $14,000 to $20,000. The SBA guarantee fee adds another $15,000 to $18,000. Appraisals and environmental reports run $3,000 to $5,000. Miscellaneous lender deposits and closing costs add $2,000 to $5,000. Total closing costs, $35,000 to $48,000. Let's use the high end, about $48,000. Here's what most people don't realize. Those closing costs can get rolled into the SBA loan. They're part of the total project cost, so your total project is about $1,048,000. The SBA loan covers 85% of the total project. That's about $891,000. That includes the purchase price portion plus those closing costs rolled in. The seller carries a note for 10% of the purchase price, $100,000. 10-year full standby, 0% interest, 0 payments for 10 years. Your injection is 5% of the total project, about $52,000. So your total cash at the closing table? $52,000. Not $500,000, not $300,000, not even $100,000, just $52,000. But remember, that's not the full picture. Post-close liquidity, your working capital and reserves, runs 10 to 15% of the purchase price. On a $1 million deal, that's $100,000 to $150,000. Remember, that doesn't all have to be cash. The sources I just mentioned, HELOCs, retirement accounts, stocks, cash surrender value, all count here. Total capital needed, about $150,000 to $200,000. In a stretch case, $150,000. Here's the sanity check. The monthly SBA payment on about $891,000 at current rates runs $11,000 to $12,000 a month. Let me clear up some terms before we dive into the next deal so you know what I'm talking about. SDE is seller's discretionary earnings. That's the total cash the business produces for the owner. DSCR is debt service coverage ratio. It measures whether the business can pay its debt. If SDE on this example deal is $300,000 or more, your DSCR lands right around 2 times. That's exactly where we target for comfort. Lots of stuff can go wrong before you have to worry. Let's dive into another deal. We closed a deal on a non-emergency medical transport company. Purchase price, $1,250,000. SBA loan, $1,062,500. Seller note, $125,000 on a 10-year full standby with 0 payments. Buyer injection, $62,500. Working capital included. 3 months of transition negotiated. SDE, over $450,000. $62,500 in cash to buy a business that produces over $450,000 a year. That's not an outlier. This is what we see every single week. Now let me scale this up. Purchase price, $2.5 million. Closing costs go up, but not proportionally. Legal and diligence run $25,000. SBA guarantee fee, $45,000. Appraisals, $8,000. Miscellaneous, $8,000. Total closing costs, about $86,000. Same thing here. Those costs get rolled into the SBA loan. Total project, about $2,586,000. SBA loan at 85% of the total project, about $2,198,000. Seller note at 10% of purchase price, $250,000. 10-year full standby, 0% interest. Buyer injection at 5% of total project, about $129,000. Cash at the closing table, $129,000. Post-close liquidity at 10 to 15%, $250,000 to $375,000. Same sources, HELOCs, retirement accounts, liquid assets. Total capital needed, about $375,000 to $500,000. Stretch case, $375,000. Here's where it gets interesting. We closed a deal on a 20-plus-year-old painting contractor. Purchase price, $1,850,000. SBA loan, $1,572,000. Seller note, $92,500 on a 10-year term at 7%. Buyer injection, $185,000. Operational manager already in place. 1 month working capital included. 3 months transition negotiated. SDE, $1,190,000. That deal had a DSCR well above 2 times. The buyer walked into a business with a manager running day-to-day operations. Over $1 million a year in cash flow. Now, notice something on that deal. The seller note was at 7% interest, not 0. Not every seller agrees to full standby at 0. Some want interest. Some want a shorter term. When the seller note terms change, the buyer's cash requirement changes. But we close over 90% of our deals on full standby terms. It takes the right positioning and negotiation to get there. This brings me to the bigger deal. $5 million's the SBA 7A maximum. Here's the math near the top of the range. Purchase price, $5 million. Closing costs scale up. Legal and diligence, $35,000. SBA guarantee fee, $90,000. Appraisals, $12,000. Miscellaneous, $12,000. Total closing costs, about $149,000. Again, all rolled into the SBA loan as part of the total project. Total project, about $5,149,000. SBA loan at 85% of the total project, about $4,377,000. Seller note at 10% of purchase price, $500,000. 10-year full standby, 0% interest. Buyer injection at 5% of total project, about $257,000. Cash at the closing table, $257,000. Post-close liquidity at 10 to 15%, $500,000 to $750,000. Same liquidity sources apply. Total capital needed, about $750,000 to $1 million. Stretch case, $750,000. Even at the max SBA deal size, you're not writing a check for $5 million. Cash at closing is about $257,000. The monthly SBA payment on about $4,377,000 runs $55,000 to $58,000 a month. With SDE of $1.5 million, your DSCR lands right around 2 times. Now let me flip the whole thing around. Instead of starting with the deal size, start with what you have. This is the question everyone watching is asking. What can I buy with what I have? Here's the reverse framework. About $150,000 to $200,000 in total capital gets you to $1 million deal. That's about $52,000 cash at closing, plus post-close liquidity from the sources we covered. $375,000 to $500,000 in total capital gets you to $2.5 million. Cash at closings, only about $129,000. $750,000 to $1 million gets you to the $5 million SBA max. Cash at closings about $257,000. And if you're lighter on liquidity, stretch cases work. We closed a deal on a commercial printing business. $323,000 a year in cash flow. Structured as 85% SBA, 15% seller finance. 3 months of working capital included. Bought at 2.17 times SDE. The buyer was lighter on liquidity but had strong operational experience. That deal closed. The point is this: your liquidity determines your deal size, not the other way around. There's a reason I saved this for last. Most people believe they need $500,000 because nobody breaks it down to this level. Brokers don't explain this math. Their job is to get you focused on the listing price and paying that. Lenders don't explain it. Their job starts after you already have a deal and they want as much of your cash in the deal as they can muster. And the people selling courses online, they've never structured a seller note in their life. The real barrier to buying a business isn't cash. It's knowing how the math works. Start with what you have. Work the formula backward. You'll know exactly what you can buy. Look, you can do all of this yourself. Some people do. But if you want a team that does this every single day handling it for you, we can help. Learn more at the link in the description.